Welcome back traders to another video. In this video, I will talk about the bearish price action for our one setup for life. So, once again, this is our one setup for life. This is for bearish price action. Once again, this setup is just a large scale due to swing or manipulation, right? This right here is a false move. This is to lure traders into the wrong side of the market. As we can see right here, we have a lot of buyers. Traders are buying here once again, until we reach this higher time frame point of interest. Remember, all of their stop loss are right here, right? After reaching that higher time frame point of interest in the form of a fair value gap, breaker block, order block, mitigation block, and other more. That higher time frame point of interest, we expect the price to react into that higher time frame point of interest. Once again, this is fractal, right? You can use this setup at any time frame. 1 day, 4 hours, 1 hour, 15 minutes, 5 minutes, and 1 minute. That is always up to you, alright? Just always remember, at the higher time frame point of interest, we expect a reaction. We have here buy side liquidity taken, and then the price shifted lower. We have here our market structure shift, leaving an imbalance, a fair value gap. The price retraced to fill that fair value gap and then continued lower. Alright, so this is our first entry once again. And in this setup, we have our second entry. Alright, we're going to have a retracement in this area. So, for bearish price action, where do we find our setup? Alright, once again, it is found inside higher time frame PD arrays, inside fair value gaps, order blocks, breaker blocks, mitigation block, rejection block. And it is also found right after taking out a higher time frame liquidity. It might be a previous daily high, previous weekly high, equal highs, trend lines, all those. Alright, these are all liquidity. A lot of stop loss are around this area. Alright, so here is our classic sell day. Once again, I'd like to emphasize, this is not the only way to trade this one setup for life, alright? This setup right here can be used in any time frame. I am just giving you the easiest way how to use this concept right here, our setup, right? So once again, we opened right here at the 12 a.m. midnight open, New York local time, and then we have here our Judas swing. If we are bearish, we expect the price to go higher first before going lower. Right here, in this part of the chart, there is a higher time frame point of interest. It might be a fair value gap, order block, or other PD arrays. If you look very closely, this setup right here is just the lower time frame of this price action right here. Price went up higher, reaching a higher time frame point of interest right here, just like this. And then if you look closely at the lower time frame, you will see a market structure shift. Alright, market structure shift lower, and then a retracement into that fair value gap. That is exactly our first entry. Alright, And then you can aim for 1 to 2 risk to reward or target the nearest liquidity. So once again here, we have our retracement in the New York kill zone, right? So the market will once again go up before going down. As we can see right here, market is going up until it reach a higher time frame point of interest. Just like this, the market went up, reach a 1 hour fair value gap order block, whatever PD array around in this area, at the same time taking out this buy side liquidity. After reaching that higher time frame point of interest right here, we expect the price to create a market structure shift. Alright? After taking out that buy side liquidity, we can enter on the fair value gap form right here. Right? Our first entry is right here, and then we can target in the nearest liquidity. Alright? So this is our second entry, just like this. Alright? As you can see, this is just fractal. I hope this is making sense. I hope you are getting mind blown right now. You are welcome. You can test this. You can check this on your chart to see if this is working. But I am assuring you, this is present every single day. It might not be in this chart, but it is present in other charts. Once again, here, we have a setup here, going up first before going down, going up first before going down. Retracement at New York kill zone, going up first before going down, going up first before going down. As we can see right here, we reach a higher time frame point of interest. That is why the market reverses, right? Just always wait for a market structure shift and then enter right there. Once again here, we reach a higher time frame point of interest. The market shifted lower, enter at the fair value gap, and then the market continued lower. This is another example, but for New York open reversal. Alright? We created the high of the day in the London kill zone. Once again, New York open reversal, high of the day at London kill zone, and then reversal at the New York open. As we can see right here, we opened at 12 a.m. midnight open, the price went up, reached a higher time frame point of interest, and then go into the lower time frame. You will see a market structure shift with displacement, enter at the fair value gap, and target the nearest liquidity. Right? Just like this. This is just the upside down version. But since I am discussing about bearish, this is more on bearish price action. Alright? But if you look closely, if you are bullish, the price goes down first before going higher. You can look at a fair value gap right in this area, enter right there, and the price should continue higher. Alright? Alright, so first one, step one, mark out a higher time frame point of interest or liquidity. So here we have our 1 hour time frame. As you can see right here, we have our 1 hour time frame right here. And the market is bearish. So our ideal price action here is the price should go up first, reaching into that 1 hour fair value gap, and then continued going lower. Step 2, wait for price to reach into that point of interest. And as you can see, we reach into that 1 hour fair value gap. As we can see, the price is still outside of the New York kill zone. Alright? If that's the case, you need to wait for time. Alright? We have here price, but we don't have time. So we need to wait for time and price to meet each other inside this kill zone, alright? So wait for price to meet with time. Once again, if there's a setup, but we are outside the kill zone, no trade. If we are inside the kill zone, but there's no setup, no trade. But if we are both inside the kill zone and we have a setup, we have a trade. So as we can see right here, price went up, reached into that 1 hour fair value gap, our point of interest. We waited for price to reach time. As we can see, we are inside this New York kill zone. Price took out that buy side liquidity, at the same time reacting into that 1 hour fair value gap. Right now we wait for an entry position. Right, so wait for smart money reversal. We want to see a market structure shift lower. And as we can see, we now have a market structure shift and we have a very big displacement right here. So what should we do? Enter at the fair value gap form. But remember, if we have a big fair value gap, we should enter at the 50% of the FPG. If we have small FPG, enter at the low of the nearest FPG. So in this case, we have a big fair value gap. So we need to enter at the 50% of the range. As we can see, this is the 50% of that fair value gap. We should enter right there on the 50%. Stop loss at the swing high that took out the buy side liquidity. Aim for the nearest sell side liquidity or 1 to 2 risk to reward. Alright, as we can see, we are inside a trade here. Alright, so target for only 2 RR or nearest liquidity. And as we can see right here, this is our nearest liquidity. Price took that out very strongly and then eventually hitting our take profit. Alright? So this is just an example of our one setup for life. Don't worry, I will show you a lot of examples for you to base your trading. Alright? So I will see you on the next one.